Good morning, everyone. Welcome to our series 2024 YouTube Mentorship. And today I want us to look at Forex Trading Psychology. So some of the key concepts that are covered in this tutorial, we will define what trading psychology is. Then we will look at the importance of trading psychology. And then we'll be able to see the components of trading psychology and the common psychological trading mistakes that traders make. So when we talk about trading psychology, this refers to the emotional and mental state of a trader when participating in the Forex market. You find that successful traders require more than just technical analysis and a solid trading strategy. So when it comes to the aspect of trading psychology, it basically involves understanding and managing the psychological aspects of trading. In Forex trading, actually, we say that Forex trading is 60% psychology, and the rest, technical analysis, fundamental analysis, or market analysis generally caters for the 40%. So you find that the bigger percentage is on the psychological aspect of it. And as a trader, if you understand the psychology of trading, it becomes very easy for you even to maneuver through trading, and you find that you will get an edge or succeed in a quicker way than someone who doesn't understand what trading psychology is. So when you look at the components of trading psychology, we begin by looking at emotional control. Emotional control, you find that when you're trading, there are some emotions that might maybe probably be able to affect you, and you find that you might end up making what we call trading mistakes. Okay, so when we talk about emotional control, definitely awareness of emotion as a trader, it's very important. So you need to recognize that emotions like fear, greed, and impatience can significantly impact decision making. So you need to develop strategies to control and manage these emotions to avoid impulsive trading. Also, you need to understand discipline and consistent, because it's very key when it comes to Forex trading. So when you talk about discipline, okay, when you talk about discipline and consistent, you need to understand that successful traders require discipline in maybe probably adhering to their trading plan. Also, traders must consistently apply their strategies without succumbing to impulsive actions. And also, a strong psychological foundation helps maintain discipline even in challenging market conditions. So all these aspects are very important to you as a trader. Then risk management also falls under the trading psychology, and effective risk management is a key component of successful Forex trading. So as a trader, you need to determine the appropriate position size, set stop loss orders, and manage risk to avoid significant losses. Psychological discipline therefore becomes essential for you to stick into the proper risk management rules. Then we have you need also to consider being patient, and also you need to consider the aspect of time as well. So you understand that Forex market can be volatile, and not every moment is suitable for trading. So patience becomes very crucial for waiting for the right opportunities so that you can be able to engage the market. So as a trader, you need the psychological resilience in order to be able to avoid entering trades out of boredom or maybe probably frustration. Then you need also to consider the component of learning from mistakes. Okay, so you'll definitely maybe as a beginner and even experienced traders, you'll definitely make mistakes, and it is always recommended that I always say that a mistake is not a mistake, but a mistake is to repeat a mistake. So if you make a mistake today, that you can be forgiven for making that mistake today if it's the very first time. But if you repeat that mistake tomorrow, definitely that now becomes a very huge mistake. What I want to mean, it is a mistake to repeat a mistake, because once you make a mistake, you need to learn from that mistake and avoid repeating that mistakes. So you need to learn or understand that losses are inherent part of trading. So you'll definitely make losses despite of how knowledgeable you are or how experienced you are. You cannot corner the market 100% all the time. So traders who can accept losses, learn from their mistakes, and move forward without emotional baggage are more likely to succeed in the long run. Okay. So the other thing you need to consider is the aspect of, or the component of, confidence and positive mindset. Forex trading, it's all about it's I call it a game of mind. Okay, it's a game of mind. So having a positive mindset is very crucial. So confidence is essential, but it needs to be balanced. Okay, so don't be so much of a confidence, and also don't be underconfidence. Underconfidence means that maybe this is when fear comes in, and overconfidence, this happens when maybe probably you have a high winning streak that maybe probably makes you now to feel that you're on top of the market, and you tend to be overconfident, and then you might end up making very costly mistakes. So a positive mindset helps traders to navigate challenges and learn from the experiences and stay focused on their goals. So like I said, overconfidence can lead to complacency and poor decision making. So you need to avoid overconfidence at all times. Then we have the component of adaptability, and this is the ability to adapt to changing market conditions, which is very vital. Okay, so the forex market is dynamic, the financial market is dynamic, things keep changing. Maybe probably geopolitical tensions may come in, so meaning that now we have high volatility. So with high volatility, you need to adapt accordingly, and maybe probably check on your risk parameters so that you can be able to ensure that you're trading well without risking so much. So traders with psychological foundations can adjust their strategies when necessary, and also avoid emotional reactions to short-term fluctuations. Okay, so the other component that is very key in terms of trading psychology is what I call objectivity. And objectivity, basically here we talk about emotional detachment that allows traders to make more objective decisions based on facts and market conditions, rather than reacting emotionally to price movement. So objectivity becomes crucial for successful analysis and execution of trades. So you have to be objective in your trading. Okay, so the other thing that you need to understand is how to handle pressure, because forex trading will come with a lot of pressure, and especially probably when you are in losses, there is that pressure on how maybe to manage it, whether you cut losses or not. So you need to be in a situation whereby you can be able to handle pressure. So because you find that trading is or can be stressful, especially during periods of high volatility. So as a trader with a strong psychological mindset, you can be able to handle pressure more effectively, and therefore reducing the likelihood of making impulsive decisions. Okay, so from these components of psychological components, probably now we can be able to arrive at what we call common psychological mistakes, and you find that these are mistakes that traders make despite whether they are novice traders or experienced traders. At some point you'll find yourself making these mistakes. So as a novice traders, also it's good for you to understand these mistakes and begin working from them in your beginners level. Okay, so because if you work on them from the beginner's level, it means that you'll avoid making these costly mistakes, and therefore you'll avoid maybe probably blowing account after account, or maybe making huge losses in your forex trading. Okay, and therefore that means that you'll be able to break even faster. So one of the mistakes that traders make is lack of discipline. So deviating from your trading plan, taking impulsive trades, or ignoring predefined risk management rules. So this becomes very costly as a trader. It's a very costly mistake. So how do you overcome this? Basically, you want to create a solid trading plan that includes entry and exit points. Okay, so you define your entries and exit points accordingly, and then you also need to measure all I've written down risk to reward ratios, position sizes, etc., etc. So these are things that will be able to guide you in terms of avoiding, in terms of being disciplined, because once they are written down, you're always able to review them even before you take trades, so that to confirm that your trades actually adhere to whatever you have written down. So you find that sticking to the plan and also avoiding decision based on emotions or short-term market fluctuations will be very essential, especially in terms of being a disciplined trader. So the other common psychological mistake that traders make is fear and hesitation. And you need to understand that being afraid to enter trades or hesitation to cut losses when necessary can be a very, very costly mistake. So fear comes in place, especially when maybe you have incurred some losses for the previous trades, and therefore you fear now to enter the market because you fear to make even more losses. Or even before, when you're starting trading, you might have that fear because maybe probably you don't want to lose some money. So how do you overcome fear? Definitely one of the best way to overcome fear is to lower your risk as low as possible. You can even trade with the lowest risk 0.01 lot size. Okay, so with this, if you have a continuous winning streak, definitely it will tend to raise your confidence, and you find that and now you'll be able, with your confidence being boosted or being raised, you'll be able to avoid fear. All fear will be eliminated automatically. Hesitation, this is whereby you are hesitant in terms of cutting losses. So you're in a trade that is a losing trade. It has completely violated your strategy, but you keep on adjusting your stop loss so that your stop loss cannot be hit. So instead of risking the planned, maybe probably you had planned to risk $20, you end up losing like $100 or even blowing the account because of hesitation to cut losses. So you need always to know exactly what point you need to cut your losses, and that's the place you need to put your stop loss, and you become disciplined. When your stop loss is hit, it's well and good, because if you lose, yes, there is the pain of losing, but definitely you'll be losing an amount that you are willing to risk, because that is the purpose of a stop loss. Okay, so understand that losses are part of trading, and having a well-defined risk management strategy can help alleviate fear. Trust your analysis as well, and your trading plan, and avoid making decisions based on emotional reactions. So that will help you so much in terms of overcoming fear and hesitation. So we have emotional reactions. Okay, emotional reactions, this is whereby you tend to be affected. Your mind tends to be affected emotionally. For instance, you might receive very good news, and this makes you to become so much of a joyous, and therefore you might end up making irrational decision. As well, you can receive bad news that will affect you emotionally, and then you find that you'll be able, you can be able at that particular moment, you can be able to make irrational decisions, which might end up being costly decision in terms of your trading. So it's always good, before you start trading, it's always good to ensure that you are in a state of mind, your emotions are at par, and there is nothing that is disturbing you at all. Okay, so the other common mistake, psychological mistake, is greed. Okay, so greed becomes when you want, as a trader, you want to make a lot of money within the shortest duration time possible. You have $1,000 account and you want to double that account within 24 hours. That is greed. Okay, so with greed, you find that you'll be taking excessive risk, or you hold on to winning positions for too long in the hope of making more profits. Okay, so remember, whatever goes up comes down, or whatever goes down comes up. So it will not, the trade will not go down forever, or the trade will not keep buying forever. So you need to know when to take your profits. Okay, you need to know when to take your profits, and you'll be satisfied with those profits. Okay, so realistic profit targets, setting realistic profit targets becomes a very nice way to be able to overcome a greed, and using proper risk management to determine position sizes based on your trading account size. Okay, basing on the amount that you have, also can help you alleviate the aspect of greed. You need to avoid chasing profits and be content with consistent controlled gains. So for instance, this is where I say that you need to grow your account slowly. Like I've always said, forex trading is it's a journey, it's not a destination. Okay, also forex trading, it's a marathon, it's not a sprint. So it's a step by step journey. So you need to walk that journey step by step, and slowly but sure. Okay, so the other common psychological mistake that traders make is overtrading, and this is engaging in too many trades without proper analysis or entering the market excessively. Okay, so overtrading can be as a result of, also can be driven by greed, because you want to make a lot of money within the shortest time possible, so you tend to overtrade. Also, overtrading can be caused by what we call revenge trading, when you make losses and then you want to recoup your losses as soon as possible, so you start doing what we call overtrading. Okay, so how to overcome these? Trade only when there are clear and valid signals based on your trading strategy. Okay, so you only want to engage in the market when your trading strategy has played out correctly. That is, it has played out 100% to confirm that now you can be able to engage in the market. Okay, so what you need to understand as a novice trader is that quality is more important than quantity. Okay, so it's not about the number of trades you open in a particular day, but it's all about the quality of those trades. Are they high probability trades? Okay, because when you're trading, you want to focus on high probability setups rather than trying to be constantly active in the market. Okay, with high probability trading setups, definitely this will help you minimize losses, and also it will help you preserve your capital. So the other mistake, psychological mistake that novice traders make is lack of patience. So impatient comes in when wanting to see immediate results or entering trades prematurely. Okay, so one, you don't want to wait for your strategy to be confirmed 100% that now this is the best time that you can be able to engage in the market. Two, this is whereby you want to see immediate result. Okay, you want to enter the market and see immediate results, so that will cause you maybe probably to blow your accounts and also to lose your trades as much as possible. Okay, so you might incur so many losses at that particular moment. Okay, so how to overcome lack of patience? Basically, you need to understand that not every market movement is an opportunity for you. So you wait until your strategy is confirmed. Okay, so you wait for what we call predefined setups, and be patient for the market to confirm your analysis. So patience is very crucial for successful long-term trading. Actually, forex trading, it's a game of patience. You have to be patient. So if you're impatient in forex trading, know that these will cost you big, and it will also teach you a lot of patience as well. Okay, so the other thing that you need the common mistake that you need to avoid is failure to accept losses. Okay, so refusing to acknowledge and accept losses may lead to emotional distress, because like I said, not all time you'll be able to win in the market. There are times that you'll take trades, and these trades will definitely go against your analysis. Okay, so you need to accept that. And the reason why you find that most of the traders don't accept losses is it's when it comes to the aspect of over leveraging. So you find that they have over risked, and therefore they'll tend to lose a lot of money, which becomes very painful. So how to overcome these? You need to embrace the fact that losses are a natural part of trading. So the moment you know that losses are a natural part of trading, and that no trade setup is guaranteed, then you will practice what we call proper risk management, such that in case of these losses, at least you are losing a small amount of capital, and that is capital, maybe an amount that you are willing to lose. So you need to always set stop loss orders in order to be able to protect your capital, and also view these losses as the cost of doing business in the financial market. Okay, every business has its cost of doing business, so losses becomes part of cost of doing business when you're trading forex. Okay, so the last common psychological mistake is over reliance of others' opinion. Okay, so blindly following tips and rumors or other traders' opinion without conducting personal analysis becomes a very costly mistake. So as a trader, despite maybe probably taking signals, or despite probably receiving opinions from traders, you need to validate the same. Okay, the reason why I usually say that as a trader, even if you're taking signals, it's always best for you to be able to understand. Okay, it's best for you to be able to understand how the forex market works, such that when you get someone's opinion, you're not fully or 100% relying on that opinion. You can be able to check the opinion and validate, and be able to tell whether it's an opinion you can be able to act on, or maybe it's not an opinion, or maybe probably it's not an opinion that you might not want to act on. So how to overcome this? Definitely, number one is learning forex. So you need to take the forex trading course, and you become acquainted in terms of forex trading. Okay, so also you need to develop your trading skills and strategies. And while staying informed about market news is essential, so making decisions based on your analysis and understanding of the market rather than external influences becomes crucial as well. Okay, so those are some of the common psychological mistakes that traders make. And I find that by addressing these psychological mistakes and adopting a disciplined and strategic approach to trading, beginners can improve their chances of success in the forex market. So you need to develop a resilient and focused mindset, which is important in acquiring technical skills in the trading world. Okay, so like I said, forex trading is 60% psychology, and you find that the moment you master the psychology of trading, this will go a great deal in terms of helping you to be a successful trader. Okay, so there are two books that I'll be able to recommend to you in terms of helping you to improve your trading psychology. And the author of these two books is Mark Douglas. So he has a book called Disciplined Trader, and another book called The Psychology of Trading. Okay, so you can check on those two books, and they'll be able to help you a great deal in terms of improving your trading psychology. So thank you so much. If you got value in this video, ensure that you like and comment. Let's engage in the comment section, and see you in the next tutorial.